Greetings to everyone. Okay, so you can clearly see what happened here is you started out under this support. Okay, this has a resistance, and you can see how straight the price is here, and how it had to make a rapid shift momentum because it knew it had a lot of resistance here, resistance points. So it was stable at first, right? So you can tell that this was the intended plan. It's a lot easier to read in the past than it is the future, but I can definitely tell that that is what happened. So there was an intention. They intended to break this support, so they kept the price stable or linear. You can see it looks just like a straight line under this resistance here. Then right after Asia session, all throughout Asia session, then at Asia session, which is London, the London Open, they applied the momentum to break through straight through all of the resistances, the upper resistances, and use them as support. And then at the New York time, New York used that support. So London broke through everything, all of the resistances. London, and then did the hard work for New York, and New York injected more momentum to push the price higher um, with that big reward area that I was talking about. Now we can see that it didn't get, uh, it missed the target by about 10 pips. So, but we can see that that was clearly the intention, um, was to cover this reward area. And you can see the it being supported by this right here. So as this as the reward and this as the risk, that's basically what happened during the New York session. All right, so it wasn't perfect. If you were trying to trade these lines, you would have been probably selling here, and then you would have bought. But if you were at this point, then perhaps you bought here, but your profit would have been diverging until this point. And so if you were trying to buy again from here, then you would have sold here and then bought again here, and then you would have closed out here without hitting this target. So you would have scaled in a few times here. You would have made profit on this day, but this probably was just enough to make back whatever was lost yesterday. Let's look at what's December 23. There will be a 48-hour break, so let's look at December 23's forecast. All right. So first of all, just like I said, there's like these two. There's resistances that are attracting the price. All right. So it's there's because there's nothing underneath, so it's time for the only thing that price is likely to do is even if it digs down in price, it's going to return to these points here. All right. Even if these lines are drawn down, um, eventually it will reverse up to these points. So they act like attractors. So they also act like resistances, and they also act like polarities. So if price crosses them, then they'll become supports. Um, so currently currently we have price in under this region, and if you look at we've got this diverging here, so it's unlikely that price will get above this point. This is too steep a slope, so price is either likely to go to stay in this area, or stay in this area, or work with something underneath it. But it's unlikely to go into this region. So that being said, a lot of times what happens is price will crawl up into here until it falls on itself, because the slope is too steep, so it will fall onto this as a target. But you can see that this can't be used as a reward region, or even this can't be used as a risk region. This could be used as the risk region, right? and this as the reward region. Um, and this can also be used as the risk region and this as the reward region, since this is bigger. So the few things that can happen is, but this definitely cannot be used as the risk region after, let's say, this point right here. Let's say here you've got like 72 pips versus 67. So somewhere around this time, about that's the 15-minute. Okay, so let's go into the 5-minute here. So let's take this for example. You take this here, 87 pips to 73. So technically, let's see, 2, 4, 6, 8. We've got 2, 4, 6, 8. Yeah, it does look like that it's it has buy side activity for today. Now, looking at this on this scale, it does look more practical that this could be used as a risk region versus this side, this region, because this is unlimited reward. So obviously, if you're measuring unlimited reward, even though the slope is steep, I'm measuring unlimited reward to this limited region, then it would appear as this is a buy side trade as long as it stays on this side of the line. If it is in this side of the line, if let's say it's coming down from this line down to here, I would not think that's a good trade, although that's very possible it would do something like this during that day, out of the sheer weight and momentum of this steep slope, would just fall onto this target. And so this region here, this is 72 pips to 78. So 65 to 72. Okay, so this region stays consistent at 73.84. Okay, this is 73 and 73. So up until this point, right here, this is about 1920 GMT, which is about halfway through the New York session. So 76 to about 76 to 72. Let's take this one right here. This is 16 GMT, so this is 61 pips to 72 pips. So throughout this time, if it is under this line, then it would be good to sell this until this would mark the risk region until about 16 GMT, which is about the start of the New York session. So at 16 GMT, you can see that 60, 70, but at 18 GMT, let's say 18, then it starts to slide off as 1-to-1. So about halfway through the New York session, that's when it starts to turn not profitable to sell this. If you're under this region, that's when it would start to turn profitable to buy up to this region, up to this line, this boundary. So it's unlikely, I think, that that price at the second half of the New York session, that it will target this line. I think that's unlikely, and use this as the risk region after the second half of the New York session. I think it's more likely that the entire day will use the entire day to hit this as a target, and the price is already under this, so I think it's more likely that it will just hit this as the target. Now, if it does hit this as the target for let's say the first half of the day, or before the New York session, If it hits this, then it will be that you can use this as a risk region to return back up into these two, targeting this and then targeting this. That would be favorable. Let's say it's after the New York session, it's around, the price is around here, it would be favorable to target this and then this and plus this. So anything's possible, but that looks like the most likely combination. The other thing that would happen, the other two things that could happen is it could fall under here, and then it would use this as a risk region, fall under here, and use this as a risk region to continue following, perpetually keep following, because there's nothing under here. The other thing it could do is it could get above here very fast, and let's say during the Asia session, or just the opening price on Monday, 0 GMT, then you would use this as a risk region, and it would stay, and the price would stay above this boundary for the day. So, but if let's say if prices at any time in this region, let's say at the beginning, and then I would not trade that, and I would expect that the price will probably just fall to here. And if that happens, then you should probably expect for it to use this. If it hits this boundary, you should expect it to return back up during the second half of the New York session and target this. That would be my prediction here, and let's see what happens.